Tesla had only enough cash to stay afloat for a few more weeks. The company was losing money on every car it sold, and investors had been gradually pulling out. The CEO was about to deposit his last personal funds into the company's account. The date was December 23, 2008. Elon Musk had already invested approximately $35 million of his own money into Tesla. His other company, SpaceX, had come close to bankruptcy 3 times. And on that December morning, Tesla's payroll was at risk. The funds transfer was nearly called off. So, was Tesla's survival just a matter of luck? Or was it the result of a calculated risk that no rational investor would have taken? And the real question is, if Tesla had gone under that week, what kind of place would the world be today? Would electric vehicles still be a niche product? Would Elon Musk be a forgotten name? And would the entire electric vehicle industry be a decade behind? Today, we'll answer all these questions. In this video, we'll explore the true story of the moment Tesla was on the brink of collapse, the impossible decision Musk made within 48 hours, and together we'll ask and answer the alternative history question that no business school dares to pose. Let's go back to 2003. During this period, Martin Eberhard and Marc Tarpenning founded Tesla Motors in Menlo Park, California. In 2006, Elon Musk provided funding for the Tesla Roadster project. The tagline was, "A fully electric sports car." This car would accelerate from 0 to 100 in under 4 seconds, run on no gasoline, and utilize next-generation battery technology. However, on paper, the business model was unsustainable from day one. The production cost of each Roadster was higher than its selling price. Tesla was selling cars at a loss. Then, by 2008, the global financial crisis was looming. Credit markets had frozen. Investors were afraid to take risks. And on December 3, 2008, SpaceX, also owned by Musk, had failed in the launch of its third rocket. Both companies were losing cash at the same time. Financial analysts at the time were in the clear. There was no realistic path for Tesla to achieve profitability. Production delays were severe, and the capital requirements were enormous. However, a few major companies in Silicon Valley saw things differently. To them, this wasn't just a failing car company. This endeavor was proof that the entire energy system could be transformed. The real question was, would it be able to survive long enough to prove it? In Elon Musk's letters and interviews from that period, there's a phrase he repeated time and again: "I never thought Tesla would succeed." Yet he invested not because the odds of success were high, but because he believed this mission was worth pursuing even if the chances of success were slim. To some, this seems irrational. For others, however, this is precisely the mindset that changes the world. And this is where Tesla's story becomes truly unsettling, because the entire electric vehicle revolution wasn't the result of a rational market decision. It was the result of a single man who refused to accept a rational outcome. To understand just how close the world came to losing Tesla, you need to grasp the entire process. By the early 2000s, the concept of electric vehicles wasn't new, but it was dead. General Motors had launched the EV1 model in 1996. By 2003, GM had recalled every single one of these vehicles and scrapped them. The official reason: lack of consumer demand. The unofficial reason: the internal combustion engine lobby, the dealership economy, and the existence of a century-old infrastructure built around gasoline. 2 Silicon Valley engineers entered this graveyard with a simple thesis: the problem with electric cars wasn't the technology. The problem was ambition. What I mean is, no one had tried to make them appealing. Although Tesla's Roadster model succeeded in changing this perception overnight, that shift in perception wasn't paying the bills. By late 2008, Tesla had delivered only a handful of Roadsters. The production line was in chaos. Each car required hundreds of hours of manual assembly, and the cost of the battery packs alone exceeded the price of most of the cars sold. Then, when the financial crisis hit, it wiped out the last group of investors, those with high risk tolerance willing to fund a money-losing car startup. But what saved Tesla was the funding round in December 2008. $40 million was raised, and it all happened in just the final few hours. The decision Musk made that weekend wasn't just a financial one, it was an existential one. He had 2 companies, 2 teams of employees, and 2 missions. And he had enough money to save only one of them. By his own account, he made his decision within 48 hours, he split the remaining capital in two. Not because it made mathematical sense. But because he couldn't choose which future to abandon. Taken over a single weekend in December, without board approval and without a guarantee of return, this decision is undeniably the most significant private financial decision of the 21st century, not because he saved Tesla, but because he saved both. Well, let's go back to that time and examine another scenario, one where the bank transfers failed. January 2009. Tesla files for bankruptcy. The story makes headlines for 2 days, then disappears. The world has bigger problems. Banks are collapsing. No one is even mourning the demise of an automotive startup. General Motors and Ford quietly note this failure in their internal reports. Their conclusion: the market has spoken. Consumers don't want electric vehicles. The electric vehicle experiment is over, again, just like the EV1. By 2012, Volkswagen is still producing diesel vehicles. It's not under pressure, not under scrutiny, because there's no Tesla Model S grabbing attention in Silicon Valley, no electric vehicle to make the comparison embarrassing. The emissions scandal still unfolds. But since there's no credible alternative on the market, the regulatory response is more lenient. A fine, an apology, everything back to normal. In 2015, Saudi Arabia's Vision 2030 doesn't exist, at least not as we know it. Because there's no urgency, oil isn't under threat. Why would they restructure the economy around a future that's already failed? By 2020, China remains the only country aggressively supporting electric vehicles, but because Tesla's battery cost curve isn't driving the industry downward, the economy isn't scaling up. Electric vehicles remain expensive. They remain a niche product. 14 million units sold globally by 2023. On this timeline, that figure is closer to 800,000. Let's look at what would have happened to Elon Musk. Because by December 2008, Musk had already sold PayPal to eBay for $1.5 billion. He had already proven himself. So if both Tesla and SpaceX had collapsed that weekend, he wouldn't have been penniless forever, but he would have been remembered as a failure. He would have been the guy who bet everything on rockets and electric cars and lost it all. He wouldn't have been able to buy Twitter, exert political influence, or own a global platform. And perhaps most importantly, no one would have been following or caring about what he did or didn't do. The most influential person of the past decade would have barely managed to get a second chance. Not because he lacked vision, but because the bank transfer might barely have gone through. Of course, we have some data, and I'd like to share that with you as well. In 2008, global sales of electric vehicles were under 10,000 units. By 2023, that figure had reached 14 million. This represents a 1,400-fold increase over 15 years. Tesla's battery cost per kilowatt-hour dropped from approximately $1,000 in 2010 to under $130 in 2023. This decline has made electric vehicles economically viable for the general public. According to BloombergNEF, Tesla's innovations in production have accelerated the industry's battery cost curve by an estimated 5 to 7 years. This is the tangible and measurable impact of Tesla's survival. According to BloombergNEF, a 5 to 7 year acceleration and a 1,400-fold increase in global electric vehicle sales. Battery costs have dropped from $1,000 to $130 per kilowatt-hour. None of this was inevitable. None of this was guaranteed by the market. These developments became a reality in the final hours of a weekend, thanks to one person refusing to let rationality prevail and thereby ensuring a company's survival. What I mean is that Tesla's bankruptcy would have caused us to lose the past 10 years. If you enjoy stories like this, make sure to subscribe and turn on notifications so you don't miss the next one.